All right, let's settle this argument. Flipping or renting, which one's better? Look, flipping looks great on TV, but renting is what builds true wealth. So let's settle this debate once and for all. All right, let's talk about it. Flipping versus renting. It's the ultimate showdown in real estate investing, right? Not really. Look, anyone who knows me knows that I work with 𝐴𝐻𝐿 from HGTV in his homeschool program. I love the guy and he's a great person, but HGTV doesn't show you. You see those 30-minute HGTV shows and flipping looks like a dream, right? You buy a house, you fix it up, boom, profit. Well, here's the reality. Flipping can absolutely destroy your business, drain your bank account, and trash your credit if you're not careful. More beginners lose in flipping than those who actually make it big, and that's because they make rookie mistakes like underestimating renovation costs, overpaying for the property up front, or banking on unrealistic selling prices the after repair value. Even seasoned investors run into bumps in the road, or worse, financial sinkholes that are tough to climb out of. I personally just shut down my entire flipping company. According to the Motley Fool, the average ROI for house flipping in the second quarter of 2024 was 28.7%. The average gross profit was $70,250 on 74,618 single-family homes and condos were flipped. 7.2% of all those homes, of all home sales in that quarter. Houses flipped in Ocala, Florida netted the top average at an ROI of 141.5%, and Alabama is something that I'm looking at flipping in this year. But here's the good news. You don't have to pick just one. There's a way to do both and build a balanced, profitable real estate portfolio. So today, I'm going to break down the pros and cons of flipping versus renting. And by the end, you're going to have a clear understanding of which one makes the most sense for you. Hey, before we get into it, do me a favor, help me with the algorithm, hit the like button and subscribe if you want more no BS, just real estate advice every week. So let's dive in. Hey, flipping is tempting because it offers quick cash. If you do it right, you can make tens of thousands of dollars in a matter of months. And here's why people love it. It's got fast returns. I've done it. Unlike rentals that pay you over time, flipping gives you a lump sum profit in a relatively short period, 3-6 months, depending on the level of rehab and your capability. You can be hands-on. If you love transforming properties and getting involved in the process, flipping gives you that satisfaction. If you're timing the market correctly, flipping can be incredibly lucrative. You buy low in a hot market, buy now, wait 3 months, the property will appreciate even if you do nothing. 2020 to 2022, that was happening. But here's the flip side, pun intended. Flipping is a high risk, high reward game, and it's easy to mess it up. Some common challenges include unexpected costs. You open up a wall and you don't know what's behind it. Renovation budgets always go over. If you think it'll cost you 30, plan for 50. Market fluctuations are always happening. So if the market slows down or crashes while you're mid-flip, you could end up stuck with a property that you just can't sell. And then there are always financing hassles. Hard money loans can eat into your profits with high interest rates and short repayment timelines. And then there are tax implications. You may not realize that flipping is taxed as active income, meaning that Uncle Sam takes a bigger cut than a passive rental income or equity. But flipping isn't all bad. It's not the get-rich-quick scheme that TV shows make it out to be. If you're considering going into flipping, then go into it with your eyes wide open and always have a contingency plan. Let me talk about why I got into rentals. Renting might not have the same instant gratification of flipping, but it's a long-term wealth building machine. It is a marathon, not a sprint, truly. Here's why rentals are a solid play. First, we'll say passive income with quotes, because you do have to do some work. Monthly rent checks can mean cash flow that pay your bills, grow your savings, or can be reinvested into more properties. Number two is appreciation. Over time, your property value increases, which boosting your net worth without you having to lift a finger. And last are the tax benefits. Depreciation, mortgage interest deductions, and other tax incentives make rental properties one of the most tax-efficient investments. Last is that the tenants pay your mortgage, so your renters essentially pay down your loan for you, meaning more equity and eventually financial freedom. You can live very well with just 5 to 10 rental properties, but rentals are not completely hands-off. You're going to need to deal with tenant issues. From late rent payments to repairs, managing tenants can be a headache if you don't have a solid system in place. Find a qualified property management company to help you with that, or just manage yourself, and I can help you. Upfront costs, financing options like VA loans, house hacking strategies, getting in started rentals requires a financial commitment, and it is a long-term commitment. Unlike flipping, rentals require patience and a focus on the big long-term picture.
What if I told you you could make thousands more a year by getting on the fast track to escaping the daily grind with one simple trick? So you know those finance gurus on TV, they're going to have you start by eliminating your daily latte. I say, enjoy the coffee, and let's work to eliminate something that's not so enjoyable. Your biggest expenses in life, taxes. Step one to doing that is setting up a business entity. Setting up the right type of business structure is going to do a few things for you. One, it's going to allow you to pay a lot less in taxes. Two, it's going to protect you from liability associated with your business. 3, it can open doors to business funding and credit to support your marketing inventory and other business expenses. I'm introducing you to Prime Corporate Services. They're experts in helping our clients get structured the right way. You get a complimentary consultation with one of their experts to brainstorm ideas, and if it makes sense, they'll set up your business entity for you. Hey bud, so what's the catch? Well, they know after they prove how good they are and how well they're going to take care of you, you're probably going to want to do more business with them in the future. That's it. It's the old show them how you can help them by actually helping them trick. I use Prime myself. And they're going to take a look at your situation, take care of all the complex nuances of setting up a business, and make sure that you're structured the right way. So book a time now for your call so you can start keeping more of your hard-earned money. Book your call now. The link is in the description.
So if you're looking for steady, predictable wealth building, rentals are where it's at. Over time, they can create financial freedom, allowing you to step away from your 9-to-5 and enjoy life on your terms. But here's the thing, you don't have to choose between flipping and renting. There is a way to do both strategically. That's how I got started. If you're using the flips to fund your rentals, you can use those profits from your flipping properties to buy more rental properties. This allows you to generate cash fast and then put it into assets that build long-term wealth. The second is the BRRRR strategy. I use this all the time. Buy, rehab, rent, refinance, repeat, which allows you to acquire distressed properties, fix them up, rent them out, refinance and pull your money back out, and then do it all over again. It's like flipping with a long-term hold strategy. Have yourself some good lenders that are on your speed dial so that you can, no kidding, get a loan right off the bat when you're doing your hard money. Then there's the hybrid approach. Some investors choose to flip properties in hot markets and hold rentals in stable areas. This lets you take advantage of short-term gains while still building passive income. Having a balanced portfolio with both flips and rentals means you're going to have cash flow now and wealth in the future. Like I told you already, I've recently stopped flipping. I still do look at markets like Alabama or Indiana. I was too busy and I didn't want to take on the risk of flipping when I can just BRRRR properties and hold on to them, reducing my risk. Let's face it, if I'm 10K over budget, I can just hold the rental longer and it just takes a bit longer to get my cash back. Boom, risk reduced, right? So look, whether you're looking at flipping or renting, here are some mistakes that can hold you back big time. This is what you need to watch out for. Make sure you're using a good rehab calculator. Don't underestimate your costs. Whether it's rehab costs on a flip or maintenance costs on a rental, always overestimate. Be conservative. Overpaying for properties. If you fall in love with a deal that can cloud your judgment, stick to the numbers and walk away if the deal doesn't make sense. Always, always, always research your market. Become a subject matter expert in that market, whether you're flipping or renting. Understanding the market is critical. Don't buy in an area without thoroughly analyzing demand, rental rates, and economic factors like the Housing Affordability Index. And then lacking an exit strategy. For flips, have a backup plan in case the property doesn't sell quickly. For rentals, have reserves in place for unexpected vacancies or repairs. Avoiding the pitfalls that I just talked about will put you ahead of most investors who jump in with both feet and don't have a plan. So how do you decide whether or not to flip or rent? Really comes down to your goals and your personality. So ask yourself, hey, do I need quick cash now or am I playing the long game? Am I comfortable with managing tenants, or do I prefer a shorter project and I don't really have to deal with anybody but contractors? Do you thrive on risk or do you prefer stability? And how much time can you commit to real estate? A couple hours a week, you can get some rental property. A lot more hours per week and you can do a flip. If you're looking for consistent passive income, go with rentals. If you enjoy hustle and have the stomach for risk, flipping might be your game. And if you want the best of both worlds, combine the two. You can diversify your portfolio. All right, did we settle it? No, not really. Flipping and renting both have their pros and cons. My preference has been noted. I am a rental guy. The key is understanding your own goals, your own risk tolerance, and your long-term vision, which should direct you to your personal niche. If you're ready to take action, start by analyzing your finances and figuring out, hey, what strategy fits your lifestyle best? And then don't forget, hit that like and subscribe, hit that like button, subscribe to the channel for more no BS, just real estate advice, and let me know in the comments, are you and your team flipping, are you renting, or are you doing both? Hey, thanks for listening. Until the next video, hope you got something. Aim high.
Are you a veteran or first responder and you're ready to start your journey into financial freedom through real estate investing? Visit budevans.com and sign up for a free strategy session today. Whether you're looking to wholesale or flip properties or do what I did and build a passive income portfolio, I'll help you create a customized plan to achieve your goals. Don't wait, take action now and unlock your potential for success in real estate. Let's turn your dreams of financial freedom into reality. Head to budevans.com and schedule your strategy session now.